Hey everybody, Smart Silver Stacker here. Hope you're doing well. Happy Monday. Welcome to another live stream. So, several things I want to discuss with you in today's live stream, in today's video, regarding the plan to confiscate all of the wealth via inflation. And very likely that is what is around the corner. But let's just start off with what's going on in the price of silver today. So, right now, price of silver up a little under 3%. Pretty good start to the week. You can see that appears maybe the pullback of the past couple of weeks is coming to an end. And you can see that on silver's chart here. If we zoom out a bit, we had this breakout from this consolidation pattern here. We've talked about this many times, but we're watching this play out in real time before our eyes. And now what appears to be happening, we're getting this nice bounce in both of the metals today. And we'll talk about what's driving this. But look at this. I mean, this level right here, just above 26 bucks. This was resistance for a long time. You can see on the chart here, we hit it once, twice, 3 times, 4 times, 5 times. We broke out. We blew through this consolidation pattern. Now today's bounce is coming right off of that level. That is very bullish from a technical standpoint for the metals. So it looks like silver is once again off to the races. Of course, nobody knows what things are going to do 100% in the short term, but my forecast is that the pullback is over and now we're heading much higher. And we'll talk about why, as I mentioned here in just a moment. Of course, today's video is brought to you by Bullion. If you want to buy some gold or silver before the price moves much higher, check them out. That's where I buy my gold and silver. I mean, gold and silver, of course, commodities. A lot of places you can get this stuff, but I buy mine from Bullion because I know they'll have competitive prices, good selection, and always good service. So check them out. They got a lot of stuff to look at right now. They got all sorts of specials, bars, coins. Doesn't matter what you get. Physical metals are going to be an important asset for what is coming. So let's talk about why the metals are rising today and just about everything. I mean, look here at Yahoo, all the major stock indexes in the green today. Metals are up. This is likely a result of the very dovish sentiments that were sent our way by Jerome Powell last week. Now, Powell's not waxing dovish with his accelerated end to quantitative tightening because he wants to inflate asset bubbles necessarily. It's because he's trying to bring inflation down. I mean, that at least is the narrative, right? Or rather, he's trying to bring interest rates down. Inflation be damned, right? He's going to be dovish and inflation is going to run out of control because there's a huge problem brewing. I mean, a massive debt crisis is brewing. And you can see here when we look at the 10-year yield that Powell's having the desired effect here, waxing dovish as he did last week with the premature end of QT or the accelerated end of QT, the winding down of the shrinking of the Fed's balance sheet. And you can see the 10-year yield is coming down. Now, this is very important. The Fed needs to get interest rates on U.S. Treasuries down because we have a massive burgeoning debt and the interest is getting out of control. So U.S. debt clock here shows U.S. debt now stands at $34.7 trillion. But look, obviously this is a huge problem. It doesn't take a genius to see this, but I want to show you this chart. This is the real problem here that the Fed is facing, or at least one of the biggest ones. This is a chart of U.S. interest payment scenarios. So you can see here, we know that right now the U.S. interest on national debt, about $1.1 trillion. And I mean, look at how the interest rate has spiked since the Fed began hiking rates. I mean, it's going on an exponential tear. Now, the projections are what I want you to pay attention to here. This is where the rate will go, the interest debt service cost on the U.S. national debt in different scenarios. Now, this yellow line here, this is if the Fed makes 150 basis point cuts to the federal funds rate. That would mean by December of this year, the trajectory of the interest cost will come down a bit. I mean, it'll still be going higher, but it'll be at $1.2 trillion. Reason it's going up is because currently the average interest cost is somewhere in the 3 to 4% range. Yields are higher, so as old debt gets rolled over, it gets rolled over at a higher interest rate. But look at this. If the Fed doesn't cut the interest on the national debt by December of this year, 7 months away, we'll hit $1.6 trillion. I mean, this is an absolute exponential curve of the interest cost. And if it's $1.6 trillion by December of this year, you can imagine what the interest cost will be by 2025, 2026. I mean, it's already bigger than the defense budget. Soon it will exceed the cost of all the items on the federal budget. Interest will cost more than Social Security. Interest will cost more than Medicare. Those are the other biggest items on the budget except for defense. So we've already exceeded defense, and soon the Fed doesn't get active here and start reducing the yield on treasuries. Not only will the banking system be at risk because of all the treasuries they're sitting on, the low-yielding treasuries, where they have all these losses. Not only will real estate likely collapse, the commercial real estate sector, but the interest on the national debt will absolutely explode. So, I mean, this gives you an idea of why the Fed is absolutely going to have to cut. Because think about what if this trajectory continues without Fed cuts. I mean, you're going to get $2 trillion, $3 trillion in interest cost alone on the debt. And, that adds up pretty quick. Right now, we're running about a $2 trillion deficit, which in and of itself is almost unprecedented. But, I mean, the interest is really piling on now. When things start to go exponential like this, you got to understand we're near the end of the game. The game is almost over. This is the terminal phase of this debt experiment that we are in. And when the Fed is forced to ease, inflation is going to absolutely explode. It's going to go up like crazy. I mean, this is an interesting site, Trueflation. This gives you the compounded interest or the compounded inflation rate since January 2020. Now, this is just according to the official numbers, mind you, which we know underrepresent inflation. But according to the official numbers, 25.35% inflation since 2020. I mean, we know the cost of living is soaring, the cost of food is soaring, but this number is about to get a lot worse. This is going to get a lot worse. And, some people asked me recently in the comments and in the chat to talk about this, the president's proposal to hike the capital gains rate up to 45%, which I believe is a record high, or near a record high, maybe the highest in history capital gains rate. But you got to understand, this is the plan, right? The plan is to confiscate all of the wealth via inflation, because inflation disproportionately benefits the wealthiest in society. You got to understand that. If you use a lot of debt, borrow large sums of money, fiat currency, cash, to buy assets, then inflation drives the nominal value of those assets up, but it devalues your debt. So let's say you borrow, $1 million, you buy, it doesn't matter, anything, XYZ thing that's not fiat, let's call it shares in a company, and then inflation drives the nominal value of that company up, but you still only owe $1 million, right? So you actually made out like a bandit. But see, inflation benefits the wealthiest in society. It really hurts the poor in the middle class because it drives the cost of living up. Now, if you're a multi-billionaire or, you have hundreds of millions of dollars, you don't really care what your grocery bill is. But the asset inflation does benefit you. But here's the real scam of the whole thing is that they plan to inflate the currency, so devalue the currency, inflate the value of these assets, but then when you go to sell that, you try to protect your wealth from inflation, they simply tax you on the nominal gains at this very high rate. So really, what is the safe haven? Well, look, even precious metals, if they raise the tax on capital gains, if you you buy gold for, what is it now, $2,300, price of gold goes to $10,000, where they're going to take the majority of those gains via capital gains. So you got to understand what the game plan is here. And yet, you're still better off than in fiat, right? I mean, if you park it in fiat earning 5%, everything just gets completely burned. I mean, I think the only hope we really have at this point is that people wake up and they understand what's going on and they reject this inflationary wealth confiscatory system And maybe, we get to protect some of our wealth. I mean, I don't think this capital gains plan is going to be all too popular. We've also heard about the unrealized capital gains potential. I did a video on that about 4 months ago. You can check that out. That one got a lot of views. It was an interesting topic. I think it's something like they will take everything. This is their plan to confiscate your wealth. But the idea there is that if you have an unrealized capital gains tax, it's like if you buy gold for $2,300 and it goes to $10,000, even if you don't sell, you still owe taxes on those gains. So it forces you to sell your gold down. I mean, that's so crazy, and basically just a Marxist wealth redistribution scheme that I don't know that anybody will go for that. But if they do, it's going to be real trouble. And there's something else I wanted to kind of comment on today that I saw, because the name of the game here is to confiscate all the wealth, but it's also to utilize the divide and conquer technique. This is very important. So this is a story from Zero Hedge. Now, I don't usually comment too much on stuff from Zero Hedge because, well, let's face it, it's not the most unbiased, source. There's a lot of doom and gloom over there, but there is some important things we can garner from this. And this is a story about the former president, his campaign ad, which has now highlighted these guys at this UNC frat defending the American flag. Now, look, I don't try to pay attention too much to this stuff, this demonstrations. This is all a distraction. But the important thing is here, this whole issue of the war in Israel, the war in Gaza, the humanitarian crisis there, I don't think this was a particularly polarized or divisive issue in terms of right and left up until this point. But you got to understand what's being done here. I mean, paying these protesters, quote unquote Marxists, to go protest at these universities. And again, I haven't been following this story too closely because I think it's largely a distraction. But now what you've got them doing, I mean, they're trying to divide and conquer here, make this like a left-right issue. And this is the kind of stuff that they're getting everybody to focus on as they steal all of your wealth and they collapse the economy right under your nose. You're going to see more and more of this leading up to this election. And I just think it's so important not to fall for this, not to take the bait, just because George Soros is out there funding some protesters, and then you got, the former president, who, by the way, did a pretty good job of raising the debt himself and contributing to this whole mess. So, for those of you who think that this is an issue that you can fix at the ballot box by electing a politician from one side or the other, I think you've got another thing coming. And, if you do want to fix it in the political arena, you've got to stop electing politicians who don't care about this, right? On either side. And right now, I mean, yeah, they call the protesters Marxists. They say the Marxist demonstrations at universities. Look, they're all Marxists, okay? Right, left, rhinos, Republicans, Democrats. Look, I mean, everybody is blowing up the national debt. They're politicians. Nobody wants to turn off the taps of easy money. Now, maybe there's a few folks out there who at least talk about fiscal sanity, but it's usually just when the other party is in office. So, look, I just want to bring to your attention that this is all a divide and conquer scheme. It's all designed to get us to look over here at, something that's really not going to impact your life that much, especially if you live in the United States. I mean, sure, if you live in Gaza, you live in the Middle East, maybe it'll affect you, but there's going to be something much more important going on right now. That is the explosion of debts and deficit, the deflation, or rather the inflation, the destruction of the purchasing power of your currency, the evisceration of the entire economy via massive inflation, which is right around the corner. Okay, I mean, look at this. This is what everybody should be focusing on. Nobody talks about this in the mainstream. Very few people talk about the fact that the interest on the national debt is on an exponential death spiral higher. And we are all going to pay the price in a very big way via inflation. And they're doing their best to, bar the exits and prevent you from protecting your wealth by simply first inflating all of the assets, destroying the currency, and then taxing the heck out of those nominal gains. So, look, don't fall for the divisive political commentary. Focus on getting prepared for what is coming. Because the real problems that we're facing, no politician is going to be able to fix. And so you're going to have to do what you can to protect yourself. Let me know what you think in the comments down below, everybody. I think this is an important one, and I think it's an incredible time to be getting into hard assets like gold and silver and platinum, oil, commodities in general, because all of these things are about to explode from rising inflation. And I mean, the fundamentals 100% support higher metals prices moving forward. And, when you look at the chart from a technical standpoint, and the same goes for gold, I mean, it's looking very good too, but silver especially, I mean, it really couldn't look better from a technical standpoint. We just got a retest of previous resistance. Silver is bouncing off. That's support. That means that the next wave of this metals bull market is likely going to be unfolding in the very near future. And the fundamentals support that too, because the dollar is about to get slammed. So let me know what you think in the comments down below. Stay safe and happy.